Hey, what's going on, everybody? It is Aaron Trevino here, and we have a terrific guest. We have Ben Sanders from down in San Antonio. He's an active military member, and he is transitioning into real estate. He's active in the real estate community in San Antonio. How you doing, Ben?
I'm doing very well. Thanks for having me today. I'm excited to have our chat.
Absolutely. I know this has been in the works for a little bit, so it's great to see you, and I'm really looking forward to this podcast.
Yeah, absolutely. For sure, man.
Okay, so for those of us who aren't too familiar with you, could you kind of introduce yourself a bit?
Sure, yeah. So my name is Benjamin Sanders. I live, like Aaron said, I'm down in San Antonio. Been in San Antonio about 3 years now. Originally kind of grew up in Florida, joined the military, been in the military about nine and a half years now. And so the Air Force has taken me all across the world, and here I am in San Antonio. I love it. So the longer I'm in San Antonio, the more I learn about San Antonio, the more I love it. So getting out of the military here pretty soon, staying in San Antonio and going full time into commercial real estate.
Absolutely. So, what is it about San Antonio that you seem to like?
And this, you hear it all the time. It's like it's a big city with a small town feel, and just the people, and it's so true, right? You see these huge skyscrapers and everything, but the more people you talk to, it's just everyone's so friendly. It seems like you bump into the same people almost everywhere you go in a way. So it's like, holy cow, this place is huge, but it has a small feel to it. So it's excellent. And of course, the culture, the food, just all the, things to do, right? Tourism is a huge part of the San Antonio economy. And for a good reason. There's so much to do and see here in San Antonio that it would take forever to see it all. And so the more you learn, the more you want to learn.
Absolutely. It is, that speaks volumes about the city of San Antonio, considering, someone like you who's been all over and yet, you still speak really highly of the city. So I think that's awesome.
Yeah, absolutely. Like I've been so fortunate with the military. They've sent me almost to every part of the country to do training. I'm in search and rescue in the United States Air Force right now. And so we train in all kinds of different terrain and climates and geographies. And so I've been fortunate enough to see a lot of different parts of the country and parts of the world. And I have to say, I love San Antonio, as a place to live, 100%.
Absolutely. So could you kind of maybe talk about the different terrains that you've kind of trained in, different things you have to take into account when you're training?
Yeah, sure. So, so I'm an active duty Air Force Pararescueman. Have been for almost 9 years, or a little over 9 years now. And so our kind of bread and butter is to rescue. What our job was developed to do was to rescue downed pilots behind enemy territory, and that could happen in any environment, right? It could be in the mountains, in the middle of the ocean, it could be anywhere. And so we train to be able to rescue, right? Pilots or isolated personnel in any environment on Earth. And so as such, we go train as much as we can to keep all of our skills current in these different, whether it's cold weather environment, whether it's high angle mountaineering type stuff or waterborne operations. And so it's taken me all over the country and just given me such a wonderful amount of experience that I wouldn't trade for the world. So a lot of people are asking me, well, what, Ben, if it's so great, why would you be getting out of it? Here you are at almost 10 years in the Air Force. And for people that are familiar with, the military, it's like, hey, Ben, you're at the halfway point. Why don't you just stick it out the 20 years and get your pension? Well, I kind of came into the Air Force with a mission to do some pretty cool stuff, to do some fun stuff, jump out of some airplanes, do some scuba diving, and make some friends along the way. And that's what I've done. I couldn't be more fulfilled, and I don't have any regrets with my military career. It's been absolutely phenomenal. I wouldn't trade it for the world, but it's time to challenge myself in a different way. And that different way right now is commercial real estate.
Absolutely. So out of any other industry, you could transition out of the military and go into anything, private equity, investment banking. What is it about commercial real estate that really speaks to you?
Sure. So I think I should probably start where my real estate interests started. And so when I was a little bit younger, I'm going to start towards the beginning a little bit. I won't make this too long. When I was graduating high school, my mom basically forced me. She handed me some Dave Ramsey tapes. or some Dave Ramsey CDs. And she basically said, hey, if you're going to drive my car, you're going to listen to these, right? Because at the time I didn't have a car. I was driving my mom's car. And so I reluctantly, begrudgingly, I love that word, begrudgingly, put them in the CD player and listened to them over the course of whatever. I listened to the Total Money Makeover by Dave Ramsey when I was younger, and it all started to resonate. And I'm like, oh my gosh, wow. Because I had already kind of avoided debt. And so my mindset going into adulthood was save, right? Avoid debt, at all costs. I didn't understand any power of positive leverage or anything like that, or using OPM, other people's money. At the time, all I knew was that I wanted to avoid debt like the plague, and I just wanted to save money. In the meantime, I developed kind of a skydiving addiction through my job, and that's another story. We can get to that later, but skydiving, if you aren't aware, is not the cheapest hobby in the world. So I threw a lot of money at skydiving, had a lot of fun, made a lot of friends, but at the same time, still was able to kind of budget and put away some money in the meantime. So fast forward, I come here to Texas, and, I have no debt, never had a credit card in my life. And this is like, 3.5 years ago. And my friends are like all buying houses. They're all buying houses, and they're appreciating, and they're all living on the west side of San Antonio. And they're all saying, Ben, buy a house. We know you've been saving money. Just buy a house. It's a good investment. I'm like, no. I don't want to go into debt. Well, my buddy started showing me, hey, like there's some really inexpensive houses. And that kind of spoke to me. I'm like, wow, I don't have to incur any or very much debt at all. So basically in the course of a year, I picked up 3 rental houses, single family. And so I was like, oh, okay, cool. I'm like in this. I want to have 10 or 20 single family houses and retire and be financially free. And you'll never see me again. I'll be on an island in the Bahamas or whatever. And so then I started to discover multifamily real estate. And I'm like, wow, man, like this, you started to really understand like the advantages of it and the scalability and the relative ease of management versus, 100 different single family houses versus 100 multifamily units in maybe 2-3 locations, whatever it is. And so I said, hey, man, I want to be a syndicator. I learned, I got onto the Michael Blanc kick and started really listening to as many books and podcasts and reading as much, real estate related content, specifically multifamily investing, as I could. And, I said, okay, cool, man, the whole GP thing, the whole general partnership, deal sponsor, raise other people's money, blah, 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 blah. And so the more I learned though, the more I learned that I have a lot to learn. And so when I looked into brokerage, I said, okay, wow. Okay, if I'm an agent, I can meet people, bring people together, understand the whole deal, see all the deals moving in the marketplace, right? Help people create wealth. And then once I really have a great understanding of the market and how these transactions work, hey, then let's look at being maybe a general partner and then raising other people's hard-earned money, right?
Absolutely. Could you kind of explain, what that GP, that general partnership is in that context?
Yeah, so my apologies. I kind of just ramble on sometimes. So if you're not familiar with the kind of apartment syndication model, it's really, you have a deal sponsor or a general partner that reaches out to either friends and family. And a lot of this money raising is governed by the SEC, right? So there's different types of offerings that limit who you can raise money from and how much money and how many people. But the basic premise is that the general partner reaches out to either friends or family or accredited investors and raises money, right, to buy an apartment complex or apartment building. They generally have a value add strategy where they'll increase the rent, they'll renovate the property, increase the rents, maybe they'll beef up the amenities and hold it for 3 to 5 years, maybe a little bit more, depending on how it shakes out, and then sell the deal, returning equity to the investors, and everyone gets their return, whether it's a preferred return or not. And so everyone kind of wins, right? So if you're the general partner, you're kind of like the quarterback. You're structuring everything. You're making sure everything goes smoothly. And if you're one of those friends or family or those accredited investors, you're just a limited partner. You give them your money, and you're limited in your amount of really not ownership, I shouldn't say that, but the amount of control that you have, right? Because you're limited. The general partner is the one who's really structuring and managing that deal and that how it performs. you are kind of sitting back, letting them do their job, because hopefully you're investing with someone that's experienced and knows what they're doing. And then your liability is limited as well, right? So you're only liable to the amount that you invested, generally speaking, right? I'm not an attorney or a tax advisor or anything like that. But that's kind of the more basic structure, right? You have someone who handles the deal and really day-to-day management, talks to the property manager and all the other players in the space. And then you have the limited partners who supply the funds and then benefit from that passivity. They benefit from all the tax benefits and everything that goes along with real estate, but they don't have to be so active in the deal itself.
Absolutely. So you made a great comparison there. Kind of you're having your quarterback, he calls the play, right, and then you have your limited partners who have, I guess, more limited liability or action, and they get those passive returns.
Yeah, exactly. And so it's great. A lot of high net worth individuals too, can benefit highly because often they're accredited investors, right? Either they have a net worth of greater than or $1 million or more, excluding their primary residence, or income of $250,000 or greater, with a reasonable expectation they'll earn that in the future. And so if you're a doctor or a lawyer, hey, keep doing that, right? Keep making a lot of money at your profession, and then shuttle your money into real estate, benefit from all the real estate. Don't worry about having to manage it, and reap the benefit of those returns later.
Absolutely. Could you kind of, maybe explain a bit more? I know you'd mentioned accredited investors over $1 million, I guess $1 million net worth, but could you kind of explain, what an accredited investor would be?
Sure. I mean, it's really just by the SEC definition, and I don't want to misquote anything here, but per the SEC, right, it's $1 million in net worth, excluding your primary residence. So maybe your home is a big part of your net worth. For the purposes of being an accredited investor, that would be excluded. And the SEC actually just released a lot of, changes in what defines an accredited investor. Now it's kind of broadened that scope a little bit more. So more people, and so the whole purpose here is the kind of consumer protection, right? So the SEC says, hey, listen, if you have a net worth of $1 million or more, or you make X amount of money per year, you have some money to spare, right? You're not scraping bottom. If this investment, goes down the drain, you're not going to be out of luck. The SEC kind of says, hey, you're accredited. You kind of know what you're doing. You have enough money and wherewithal to weather some weird volatility if it happens, and that you won't be just completely wiped out. That's kind of the premise of it. It opens up some different offerings if you have those criteria met.
Sure, absolutely. I know you mentioned before kind of, those high net worth individuals, those doctors, those lawyers, keep making your money at your given profession. What would you say to a doctor or lawyer who just basically says they're on such a time crunch, they have no time to even make those sort of investments?
No, I think that's a perfect case for a lot of these, kind of joint venture structures and these general partnerships is these doctors, lawyers, whatever it is, if you're one of these white collar, really well educated professionals that's making a lot of money at your profession, there's no reason necessarily, as long as you enjoy it and you're making good money, hey, keep doing that. And we understand, or I understand, like, you don't have a lot of time for extracurricular things, right? You don't have time to manage a 100-unit apartment building by yourself or whatever it is. And so that's the power of these syndication models is you can get in with a general partner, and really reap a lot of those benefits of real estate without the time commitment. And so you can continue your day job, make a lot of money, do your thing, and then still be in the real estate game. And oh, by the way, hey, ping that GP, right? Ask them questions along the way so that in the future, right, if and when you retire, whatever you do, hey, you have that knowledge of maybe you do want to get into the game to some extent as a general partner, or a little bit more active position. Now you have a little bit more knowledge and skills.
Sure, absolutely. I know you kind of provided an example of, the GP, the limited partners, being in multifamily, I guess, at a larger scale at 100 units. Could you ever, JV a deal on maybe a fourplex or something between, 5 to 20 units on the smaller multifamily scale?
Yeah, I'm sure, especially for people that are a little bit newer, obviously those smaller deals can be a little bit more less daunting, I should say. And so especially to friends and family too, that are saying, oh my gosh, wow, Ben, like you've never bought a 75 unit apartment building. I'm a little bit nervous to give you my last $25,000 or whatever it is. But, maybe a 10 unit in a strong market, might be a little bit less daunting. You know what I mean? So yeah, there's no problem with structuring a smaller deal like that too, that I can tell. But at the end of the day too, as the economies of scale go up, as you get bigger, right, relative costs kind of go down, cost of management. So if you can go bigger, right, safely and responsibly, there's no reason that you shouldn't at least investigate going larger.
Yeah, no, I find this really interesting what you touched on. You had mentioned how, when you first got into it, you were going to buy one, two, three, 10, 20, properties, retire in the Bahamas. That's where your mind was at. But one thing I found interesting was that you talked about how almost in a counterintuitive way, having 100 units could be more manageable than having less units.
Right.
That's kind of what it sounded like. Could you maybe explain that?
Yeah. So, I mean, if you can just imagine, right? I was at a seminar, and this is probably a year ago or so here in San Antonio. It was a local investors club. And I'm not going to say any names. I don't want to throw anyone under the bus. But there was this speaker, and they were, in a way, kind of bragging that they had, I think, like 1,000 single family houses. Yeah, it was like close to 1,000 single family houses. It was something insane, absolutely absurd. And I'm like, that sounds like a nightmare. If it works for you, that's great. I'd rather have 10 100 unit multifamily apartment buildings, right? Because if you have 1,000, let's just tone it down. Let's just say 10, right? Let's just say 10 single family houses, right? Likely they're all either spread out over the city, maybe spread out over the state, or even the country, right? In different markets. If you want to diversify, which is not a bad thing to do, to buy in different strong markets, sure, that's fine. But that's right, 10 different, P&L statements, that's 10 different roofs and 10 different all kind of capital expenditures that are completely disassociated with another and not really lined up. So the management is that much more intensive, right? And so, kind of the standard rate for property management is generally 10% for a single family house. Well, that kind of scales down as the unit size goes up for multifamily. So again, the economies of scale, right? The ability to manage all those units because they're co-located in the same place, because they've generally been built at the same time, they're just that much easier to manage, right? And then, not to mention, when you go to want to dispose of 1,000 single family house portfolio, how many people are just like, yeah, I'm looking for 1,000 houses right now. I'll pick them all up. I get it. People sell them off in little tranches, maybe 10 here, 10 there. Got it. But the ease of disposition as well, right? There's plenty. I'd wager there's a lot more buyers for maybe 1,000 unit multifamily portfolio than 1,000 unit single family portfolio, if that makes sense.
Absolutely. So, maybe someone's kind of new to investing. Maybe they already kind of have a portfolio intact. How do you take into it, when you're building or when you're building that portfolio, how do you take into account disposition, right? Do you go in, do you make part of your investment strategy, okay, this is what my disposition strategy would be as well?
Right. Are you kind of talking about value at disposition and kind of projected values?
Right.
Yeah. And so, um, really, I think just having really conservative underwriting, right? Making conservative projections based on what the market trends have been historically, right? Which have all been kind of thrown these unprecedented times right now, as we hear so often, right? So it's hard to plan for something like this, certainly, of course, true black swan event. Uh, but when you're projecting that disposition price, right, you just want to take into account like what has the market been doing? How can I conservatively look forward and see what trends as far as cap rates and market appreciation and rent rate growth? How can I conservatively underwrite for a realistic disposition price?
Sure. Could you also explain, what cap rate is and why it's important when looking at multifamily properties?
Yeah, of course. So, commercial properties are largely valued on the amount of income that they produce, right? Or the net operating income. And so the net operating income is really the gross income um, after expenses, right? So the property, you have your potential rental income. So if the property is 100% occupied at complete asking rents, then you subtract out any vacancy or turnover that you may have. And then you subtract out all the expenses to keep the property operating or running smoothly year to year, right? Reoccurring kind of annual expenses. So after you subtract that out, you have your net operating income, or NOI, right? And so that's how much that property produces. And notice that I didn't say anything about the mortgage, right? So we're ignoring the mortgage because that's more specific to the borrower a lot of the times, right? Those loan metrics and those loan terms are going to fluctuate a little bit based on the borrower and their credit and their experience and everything like that. So we ignore that, right? So we just look at the NOI. How does the property perform by itself, right? And so that NOI divided by this purchase price, right? So if a property produces $100,000 each year of net operating income, and we're trying to sell the property, or maybe we buy the property for $1,000,000, right? We would divide the NOI, or the net operating income, by the purchase price to give us the capitalization rate. It's a rate, so it's a percentage. And so if we divide 100,000 by 1,000,000, right, we get a 10% capitalization rate. And so these cap rates are used to kind of get a feel for property values, right? It's basically how much is an investor willing to invest for each dollar of NOI. So in the coastal markets, the cap rates are going to be lower because the property values are going to be higher relative to their net income. Whereas a lot of the kind of Midwest, the cap rates are going to be quite a bit higher because the property values are lower for the same amount of NOI that you're getting, if that makes sense.
Sure. So it almost sounds like, the NOI is, or basically the cap rates are kind of contingent upon the region, the area, the specific metro area, right?
Absolutely. Right. And so again, like, you look at these over time, the coastal markets can be volatile, but over time they've had the most growth. And so they have the largest amount of demand versus supply. And so they have generally, over time, they've had the lowest cap rates. And so it's just kind of what you can do and say, okay, well, what's the market cap rate? What's the kind of market cap rate for San Antonio or Austin or whatever it is for B class properties in this part of town? And so it just helps you get a feeling for what the properties are kind of priced at, if that makes sense.
Okay, fair enough. Let's take San Antonio, for example. Is there a range of what the cap rates would generally be in San Antonio?
Yeah, so on CoStar right now, the market cap rate for San Antonio is 5.7%. But if you actually look at year-to-date transactions, and again, this is via CoStar, the cap rates have been at 6.9%. So really anywhere from kind of the low fives for the really Class A located in a really nice area, all the way up to probably close to the sevens, right? So low fives, maybe up to sevens for that C minus class product. But cap rates have been trending downward, so property values have been trending upward, right? It has kind of an inverse correlation. And so, there's a lot of uncertainty right now in the market. So far collections have been pretty good, but the only time will tell what the kind of Fed stimulus produces in the long run. So we'll see what happens.
Sure, sure. So when will that day come? We're obviously, approaching late September right now. What do you what are we up against in the next few months?
Yeah, it's a little bit tough to say because so far what I've experienced, what I've been seeing is that if you give renters stimulus money, generally they tend to spend it on rent, right? Responsibly. So, which is a great thing, because if, that's kind of just a chain. If the renters stop paying their rent, property owners can't pay their mortgage, right? Different lenders can't pay their investors, and the whole system kind of collapses. And so moving forward, do I think there will be some correction in multifamily prices? Do I think that we may see some renters struggle to pay their rents in the mid to near term, it's potential. Absolutely. It's potentially possible. But at the same time, it's been performing well. It's kind of up in the air to see what the next, 6 to 12 months might look like. But so far, so good. But we'll see. Transaction volume has slowed down a lot, and rightfully so, right? People have been saying there's a lot of dry powder sitting on the sidelines. A lot of people kind of waiting for this big correction in multifamily values, because over the last, decade, multifamily values have done very well. It's been kind of the prized asset class of commercial real estate and performed extremely well. And so a lot of people want to get into multifamily, but it's cap rates are quite low, and to get into multifamily is pretty expensive, right? And so people are kind of sitting on the sidelines waiting for this big influx of whether it's people defaulting on their mortgage, property owners defaulting, or whatever it may be, negatively affecting property values, and really doing that whole, buy, or not buy, but be greedy when everyone's fearful, and vice versa. So do I think we'll see property values dip down some? Absolutely. To what extent, I'm not sure.
Fair enough. Could you also explain, I know you kind of mentioned the different classes of properties, but could you kind of mention how many classes there are and kind of the differences between them?
Sure. So if you look at commercial real estate, and specifically multifamily, right, there's class A, B, and C. And so you can kind of add the pluses and minuses. So it could be class A plus or class C minus or whatever it is. But really it has to do with, when the property was built, with what materials, what finishes, how old is it? And so it's really, there's no hard and fast, like this is exactly how you categorize these. But it's a pretty good systematic way for professionals in the space and different people to communicate, say, hey, this is a class A product. It's built in the last maybe 10 years. It has high-end finishes. It's in a good part of town. Or maybe a B class, which is still in a good part of town, but it's a little bit older. Maybe it's 15, 20 years old. And then C would be behind that in a less desirable location. That's quite a bit older, maybe in a little bit of disrepair and stuff like that.
Sure, absolutely. So what would you kind of suggest? It kind of seems like there are people, they've done those flips, they've done those new construction builds, and they're wanting to scale, into multifamily. Where's a good place to start educating yourself on, how to make that transition?
Yeah, it really depends on what you want to do in multifamily, whether you want to buy for yourself or raise money with a team or raise money from friends and family, whatever it is. So I would really try to nail that down, whether you're trying to go the syndication route where you're trying to learn and raise money. Michael Blanc is a great resource. Here in San Antonio, we have apartment educators with Devin Elder and Abel Pacheco, and they're found fantastic. You can check them out, apartment educators. And so really I would read as much as you can, right? That's all I did. I simply got onto Audible, I got onto Amazon and said, okay, what are all the books and podcasts, of course. Let me learn as much as possible about this, as wide an array of information as possible, so that I can make an educated decision on what path I want to pursue, right? And so I would caution people of reading one or two books and getting heavily influenced to just go that route, right? I would say, hey, read and learn as much as you can, take some time, right? Set aside maybe 3 to 6 months where you're just going to learn. You're just going to read and listen and talk to people and meet people. And based on your goals and your future goals and the goals of your family, what is the best course of action? So that's what I would tell people to do. And probably to just start meeting as many people in the space, right? On LinkedIn, meet the different general partners, meet the different lenders, and ask all these questions, right? Have almost like a list of hey, if this, then that, and just ask as many questions as you can to as many people to really zero in on the path that you should choose.
Sure, absolutely. I know we kind of spoken about it a bit before, kind of with the raising money. It kind of seems like it's a very daunting task, not only to do it, but also to participate in, contributing your own money to something that, you're not exactly sure if it would work out. How do how do you kind of make sure you're not in over your head and it's a reasonable start for you?
I would just take a look at what other people have done in a way, right? Multifamily is a little bit, I should say real estate in general is a little bit more attractive to um, a wider array of investors because it's a little bit easier to understand in most cases, right? You have a building that rents for X amount and it does that. I pay this much for it. And so fundamentally, it can be a little bit easier to grasp from a kind of fundamental standpoint, right? Um, and so, man, what was your question again? Remind me.
Yeah, no, it was just to make sure. Yeah, how can people make sure that it can be a daunting task to
Right.
be part of multifamily? How do you kind of make sure that you're not in over your head and what you're doing is kind of reasonable?
Okay, got it. Yeah, sorry, it's trailing off there.
Yeah, no worries.
I would say that there's different metrics. So, like the bank uses what's called a debt service coverage ratio, which I know that you're very familiar with. And so, if you take a look at these debt service coverage ratio, it's the ability of the building to service the debt, to pay the mortgage by itself, right? Without you as the property owner having to come out of your pocket. And so a lot of lenders, correct me if I'm wrong, use either 1.2, 1.25 DSC, debt service coverage ratio. What that means is that the property produces 20 to 25% more in income than the mortgage payment each month, right? Does that check? Does that make sense?
Yep.
Yeah. Uh, so that gives you some cushion, right? So if the market does something weird, or you experience some vacancies, or maybe there's some repairs you weren't anticipating, you have some cushion there. And so when you're underwriting or analyzing these deals before you buy them, it's good to take a look at that debt service coverage ratio, because even if you don't, your lender's going to, and let's be fair, right? And that's going to give you a little bit more peace of mind and ability to weather those unexpected kind of occurrences.
Sure, absolutely. Well said. Just kind of shifting gears, I'm also a bit interested. Is kind of your military background. You talked a bit about the extensive training you've done in specific terrains. What sort of lessons do you think that you learned in the military that would transfer to the kind of the commercial real estate space?
So, I've thought a lot about this. Absolutely. So, I think the biggest thing, biggest kind of mindset, I'd say, is so I guess I should back up. So, the job I'm in, pararescue, right, has a historically very high washout rate. And so, for someone that's looking to get into the job, it's very daunting. Historically, 80+% of people don't make it. So, it can be very daunting, right? Uh, and so I found what's most important, right, is once you decide, right, I decided that I wanted to be a PJ, a pararescueman in the Air Force. Once I decided that, there were no alternatives, right? There wasn't, okay, well, if it doesn't work out, then I'll go be a loadmaster on the C-130s, or I'll go do this or that or whatever it is. And I had just, it's funny is because I went to college for 2 years out of high school for physical therapy to become a physical therapist assistant. My mom was a PT. I thought it was really cool. And I still love like kinesiology, muscles, tendons, ligaments, all that stuff. I love it. And so I went to school for 2 years for physical therapy and decided it wasn't quite for me. I was working with a lot of the geriatric population or elderly, and it was extremely rewarding, but it was a little bit slow paced for my 20-year-old self. I wanted something a little more exciting. And so that's when I found out about the job I'm in now. Once I kind of did some research, right, and found out that it was really what I wanted to do, I made a full commitment in saying, hey, there is no plan B. There is no, you can't, this is a no fail situation, right? They're going to have to drag me out of the pool because I'm never going to quit. I have no option but to succeed at this goal. And so for me, that's been the biggest piece of advice that I would give anyone, because I've applied that to a few different aspects of my life, and almost every time without fail, once you truly, there's a quote and I forget exactly what it is, but it goes something like, once you fully commit to something, the universe conspires to make you successful, right? Once you fully commit to something, the universe agrees and says, okay, let's do it, and I'm going to help you out. And I firmly believe that, right? I'm not like a super, what is it called? Oh my gosh, I'm having a brain fart. When you have like a cat's foot, or you're like
Superstitious.
superstitious. Thank you. Get on camera, I forget all my words. I'm not like a superstitious guy, but I fully believe that once you actually commit to something, you don't give yourself, well, if this doesn't work out, then maybe I'll just go do this and it's okay. And no, like you can't fail. And I'm actually writing a book on this right now, which, I won't get into, but, I firmly believe in it. I'm completely convinced that that's how most people, and really everyone should live their lives. Because once you fully commit to something, right, you will channel all that passion into it and your chances of success skyrocket. And there was a study done, I forget what college it was, but there was a study done on people, and they had people, one group A, we'll call them, and then group B. Group A, they said, hey, listen, I want you to do X task, but if it doesn't work right now before we start, I want you to visualize in your head and come up with backup plans, right? If it doesn't work, that's okay. Visualize and come up with a backup plan that you think would be very viable. And then the other group, they said, you have to do this or you don't get whatever reward they were giving them, right? And so by huge amounts, the group that did not have a backup plan were far more successful than those who did. So I thought that was fascinating. And I think that's super powerful for people to take into. And again, that's something that I've had in my military career. And so I should be clear though, right? On your pursuit to that goal, yes, there are going to be bumps in the road that you should have backup plans for, right? Because, hey, maybe I want to be a pararescueman, but I hurt my knee. Okay, my backup plan is to, take some time, get my knee healthy and XYZ. But the goal, the ultimate goal doesn't change. Your strategies and your tactics and procedures, maybe they change a little bit due to the dynamic environment. But you don't change the goal, you change the strategy.
Why do you think this is hard for people to grasp? It kind of seems like, people want to keep their options open. People don't want to go head first into something like this because, kind of what you're suggesting is it's very scary for some people.
I think that's the biggest, what you just said is the most important thing to understand, is that it's scary for everyone, right? When you fully commit, change makes everyone uncomfortable, right? And there's that cliche kind of saying, courage is not the absence of fear, it's the ability to push through it, right? Because everyone feels the fear. I tell my students all the time, like everyone's afraid, right? Nobody likes to, go swim 25 meters underwater 6 times on a fast interval, right? We have students that have hypoxic episodes, right? They pass out in the pool often. No one likes to do that. It's uncomfortable for anyone, any normal human. And so I think that's the biggest thing to understand, honestly, is that everyone feels the same fear. It's how you handle that and push forward, right? You're not unique in that sense. Any change is going to make anyone uncomfortable. It's how you understand, digest, and then push through it that determines whether or not you're going to be successful. And it's that simple.
Sure. How do you even digest that first amount of fear? Because let's assume you're coming out of quarantine. Maybe you've been eating too much. Maybe you've been sitting too much. Maybe you've been watching TV. How do you take that first step into discomfort and adopting this new mentality that you're speaking of?
I would say arm yourself with knowledge, honestly, because that's one thing. And I'm just going to refer back to my experiences as a pararescueman, going through the selection course, right? Which was a 9-week course where you're swimming every day. You're really just going through the meat grinder every day. And it's just a kick in the shorts every day. And so what I would say is arm yourself with knowledge. Understand that you're going to have different emotions at different points along the way, right? So that when they come, it's not a surprise, right? So I knew that when I was going to go through the pararescueman course, the selection, the indoctrination course, I knew I was going to be yelled at. I knew I was going to be wet, cold, tired, hungry, and miserable. And so when it happened, it was like, okay, cool. I wasn't anticipating this. And I get it, right? Not everything you can anticipate, not everything you can plan for, right? Life would probably be pretty boring if you could plan for every single little thing. But what I would say is that, you know, like your example, right? If maybe you put on some pounds, some COVID weight or some COVID pounds, and you're saying, hey, I need to kick some of this off. Well, understand that, you know, once you start a diet, you start this early morning exercises, you're going to not be super motivated about it, right? You're not going to want to wake up at 5 a.m. You're not going to want to eat a salad instead of that beautiful burger that you know, or whatever. So that when that feeling comes, you're like, okay, got it. I was anticipating this. Let's move on because my goals are more important than this immediate satisfaction, right?
Yeah, absolutely. This, you know, people can call this a zero-sum mentality, an all or nothing mentality. It kind of seems like, you know, people don't like this. People, you know, kind of how you mentioned, they're afraid of change. They're afraid of taking that first step. It can be very difficult for people to adopt this new mindset.
Absolutely. Absolutely. And I mean, you know, the more books you read, the more things you learn, it's that humans are hardwired for a reason. And that's the thing is we have this hardware up here, but it's so antiquated and dated hardware. It still is reflecting, you know, our survival instincts from when we were like Neanderthals, right? Living in caves. And as far as these fight or flight emotions that we feel and the resistance to change, and it's all kind of this, you know, primal kind of instinct that we have that doesn't facilitate productivity nowadays. And so we have to acknowledge that kind of hardwiring that's a little bit dated and say, okay, cool, got it. I know I'm feeling stressed out. I'm terrified to go speak in front of those people, or I'm terrified to go approach this important person at a networking event, and saying, okay, cool, listen, that's fine that I'm feeling this. I'm going to do it anyway because that's just my hardwiring from back in the day that I'm going to ignore. And I'm going to go do the things that I know for fact have been proven and demonstrated to make me more successful and a happier person.
Absolutely. What would you tell someone who is, you know, maybe in the military and they're trying to transition out into the civilian world, into a business career, or maybe someone who's at the tail end of their contract, preparing to go into the workforce? How can those people make a smoother transition using the lessons from the military, moving into the workforce?
Yeah, you know, I'm still in the middle of it. So, you know, I'm still learning as I go, so to speak. But so far, really, I guess the biggest piece of advice I'd have for transitioning military members, and this is nothing new, would be to start early, right? You know, I started like, I feel like a year ago, really trying to build my personal brand, build my knowledge and skills. And I still feel like I'm like behind the power curve, so to speak. I think a lot of people feel like that, you know, at different times, whether or not you're well prepared or not. You know, I guess if I was like content and comfortable, I'd probably be a little more concerned. Like, geez, I don't think I'm as well prepared as I think I am. But my piece of advice would be start early, right? If you're transitioning out of the military, you need to be meeting people, identifying what applicable, appropriate career field you want to go into, right? Decide, and again, commit on, once you have done, you know, your research and identified, hey, I want to be an investment banker, or I want to be, you know, some kind of overseas contractor, right? Or whatever it is. Research it, commit to it, and then channel all your free time and effort and energy into setting yourself up to get that running, you know, hit the ground running start. It doesn't really hit the ground running once you get out. Does that make sense?
Yeah.
Yeah, because I see so many friends that wait until, you know, they're almost already out, or the last, you know, month or two, and they're still kind of like, well, okay, you know, maybe I'll do this or do that. And I'm not, and I hope it works out for them, and that's fine. But I don't believe that that's the best way to set yourself up for success on the outside.
Sure. I guess like anything else, whether military transitioning or not, preparation seems to be the key.
Absolutely. Yeah, I couldn't agree more. Prepare. Because again, you can't predict everything, but you can prepare for what you can anticipate, right? And so preparation is what really, I think, separates a lot of people, because preparation isn't fun. It's fun to go execute. right? It's fun to go do the mission, you know, as a military member. It's fun to go out there and jump out of the plane. It's fun to, you know, do the scuba diving or climb the mountain. It's not fun to necessarily like prepare for it, like getting all your gear together and making sure everything's good and doing this. It's fun to go execute. So I think that's where, you know, the professionals get separated from the amateurs, is in their preparation, because it takes discipline and energy to really adequately prepare for something, because executing it, I feel like a lot of times is the fun and easy part. Doing that backside preparation is where you separate yourself.
Okay, sure. You kind of segued into something interesting as well. But you know, if we look at Benjamin Sanders' typical day, or you know, how do you structure your day, or how do you prepare for the next day, and making sure you maximize your time and you do have that preparation?
Sure, man. I mean, it's nothing new either. It's, you know, have a list um, of things you want to get done, right? And so every night before I go to sleep, you know, I take a look at my calendar. I take a look at what's coming up the next day. You know, jot some things down that I want to get accomplished the next day. Wake up bright and early. I usually wake up at 4:30, and then have my morning routine. You know, I'm a big fan of Hal Elrod's. I need some water. His Miracle Morning, right? And so the savers, right? So you wake up and you have a little bit of silence, have some affirmations, visualization, a little bit of exercise, reading, and then scribing or journaling. And so I just devote, like, seriously, honestly, like, I'll do like one set of push-ups. I'll journal, you know, I'll write down my goals or write down what I'm grateful for like 3 minutes. You know, this doesn't have to be like a 2-hour ordeal. I think it just keeps your mind in the right place. And if you get it out of the way in the morning, right, you set the tone for the rest of the day. And again, that's a constant that I've seen many, many times, is that, you know, a lot of successful people wake up early, get their mind right, do these kind of routines to set the tone for the day, so that they've already accomplished so much in that short amount of time, so that they can go on for the rest of the day and crush everything else they want to do. And so, right, so that's how I start every day. You know, I go to work, I train all the students, and it's a great time. It's super rewarding. I get home and, you know, I take a look at some of the other things I want to do, whether it's working on the CCIM. I've been working on my CCIM designation, taking all the courses for that. And so you get home and hey, everyone's tired at the end of the day, right? And again, this kind of goes back to the preparation. Like, it takes energy and discipline and real commitment to get home after a hard day and you're super smoked, and to say, okay, I'm going to open this book back up, or I'm going to crack this, you know, crack this book and start reading, or whatever it is, right? That's where you separate yourself, in my opinion, is those behind the scenes, either preparation or after the work day, man, you're still putting in the time.
Sure, absolutely. I think that there's a lot to be said for, you know, kind of how you mentioned basically winning the morning. And I know, I obviously don't know of any of them personally, but, you know, those really high grade military officials, they'll get more done by 9 a.m. than most civilians would the entire day.
Yeah, absolutely. You know, I think the morning is just so important, because it's like sacred, right? A lot of people say that. Once the world starts to wake up at like 7, 8 o'clock and life starts to get moving, hey, emails start rolling in, phone calls, this, that, hey, can you do this? Can you do that? You know, if you wake up, you just back your life up in the morning, just like an hour, right? You have this hour where the world is not awake yet. You can get done the important things, whether it's working on your business and not in your business, whether it's meditation or the miracle morning type stuff, right? But you have that to yourself, hopefully, right?
Yep, yep. There's a lot to be said to that. So just so I kind of understand correctly, you mentioned how you're working with your students. Is that students for the PJs or?
Yeah, so I did fail to mention that part. So I, for the past 3 years, a little over 3 years, since I've been in San Antonio, I've been a pararescue instructor. And so I put the students through basically the same misery that I got put through, you know, almost 10 years ago. And so it's really rewarding, because you see the students come in with kind of a nervous, scared mindset. And once they go through all these, you know, very testing, mentally, physically, you know, tests and challenges, and they leave a different person. They leave with a little bit more, pep in their step and a little bit more pride. And so it's really rewarding to mentor and help these students become one day special operators in the United States Air Force.
Absolutely. Absolutely, Benjamin. Well, is there, what's next for you? What's your future looking like? What are you looking forward to?
Sure. Yeah. So I will be transitioning. I'm currently transitioning out of the military, right? And so really 1 January, the Air Force or the Department of Defense, the military, has this excellent program called the Skill Bridge program. And what it really is the last 6 months of your enlistment, in my case, the Air Force says, hey, Ben, you've done a great job in the Air Force. The last 6 months, we want to help you get set up to be successful on the outside, which is awesome, right? So the last 6 months of the enlistment, you can intern. The Air Force will continue to pay you, right? And so you can intern at an approved firm or company or potential employer, whatever it may be. For those 6 months, they don't have to pay you. And so you can get a lot of on-the-job training. And so that's my plan. That's what I'm planning to do is I'm going to be working with independent commercial advisors here in San Antonio with locations in Austin and South Texas, and learning the ropes, making sure, I hit the ground running in brokerage, and then following on to a full-time position and selling some apartment buildings.
Beautiful. Sounds great. Well, Benjamin, is there anything that you haven't said that you really just like to hammer home?
I'd probably just plug. Is it okay if I plug myself a little bit here?
Please.
Yeah. So I do have a podcast. So if you go over to sabrepodcast.com, you can check me out, SABRE podcast.com. Definitely connect with me on LinkedIn if you haven't already. All right. And that's pretty much it. Thanks for having me on today. It's been a blast.
Absolutely. It's been great. We've talked about so much. I not only learned a little bit about you, but also about, pararescue, what you do, your mindset, winning the morning, and a little bit about apartments as well. So we kind of ran the gamut, and it's been great having you on, Benjamin. Thanks a lot.
Yeah, thank you. Look forward to doing it again.
Absolutely. We'll talk to you soon.